Hey everyone, this is Mike Kramer of Mott Capital. Today is January 11th. It's around 7 p.m. New York time. So today we got those CPI numbers, and as we kind of reviewed yesterday, they did come in hotter than expected, at least on the headline and the core and the CPI month over month. Now tomorrow we're going to get the PPI numbers, which don't really get usually the same sort of attention as the CPI numbers. But at least for the month of December, we're looking for a 0.1% increase on PPI final demand. That's up just a little bit from last month. PPI ex food and energy up 0.2. That's up from flat last month. PPI ex food, energy, and trade, we're looking for 0.2 versus 0.1. Year over year, we're looking for 1.3 versus 0.9. Ex food and energy up 2%, in line with last month's reading, and then up 2.5% on ex food, energy, and trade. That's also in line with last month's reading. And then we'll also be getting Empire Manufacturing results as well at 8:30. So today's price action was very volatile in markets overall. And I think what we'll start with is really the currency markets, because those were very volatile. In fact, after the CPI report came out at 8:30, we see the euro plunged and then basically recovered all day long, which was a little bit surprising, I think, to many people, because we did get that initial jolt lower as we were expecting on a hotter print, but then it was like midday that just kind of faded away, and we began to see the euro actually reverse and now starting to move up towards this 110 region, which is the surprising piece, right? Because typically you would think that a hotter CPI report would lead to higher rates. Higher rates would lead to a stronger dollar. And even when we look at rates, we did have that initial surge. But even then, by the end of the day, rates began to move lower and gave back. But if we notice the rates, the initial surge came, and then by 1 o'clock, everything started to change. Now, remember, I think I pointed out that we had these 1 o'clock auctions coming this week. Today we had the 1 p.m. auction, but it was in the 30-year. And the 30-year auction went, it was okay. It wasn't terrific, but the high yield rate came in basically at the one issued. Indirect acceptance pretty much on par with last month. Bid to cover ratio just slightly weaker than last month. So it certainly wasn't a disastrous sort of auction, and I think that is ultimately what triggered this reversal in rates and pushed rates lower, especially on the back of the curve. And this, I think, is what really contributed. You can see that the dollar was basically flat most of the day, and then also around this 1 o'clock range, the dollar sell-off really kind of kicked in. I mean, and it just seems to make sense with what we were seeing in other parts of the market. So here, again, the euro initial reaction, then around this 1 o'clock time frame, you could see the euro began gaining strength versus the dollar. It leads us right at this sort of short-term resistance level at 109. Obviously, depending on what PPI reports comes out tomorrow, it's quite possible that you could see the same initial reaction where if a PPI report were to come out and be hotter than expected, you got that same sort of early drop, perhaps to the same support level around this 109 area. But likewise, if you were to get a cooler than expected PPI, I would expect that you would see the euro strengthen potentially back up to this 110 area, which has been a resistance level now going back for a few weeks. When we look at the pound versus the dollar, also similar reaction with this big move down following the CPI report versus the dollar. Notice that we got to this trend line, and that's the trend line that ultimately held. That trend line has been obviously very important. We saw a reversal in the pound and a strengthening versus the dollar. And again, this is your big resistance level here around 127.70, at least for tomorrow. Again, you get a cooler than expected PPI report, and that could send it up to 128. Otherwise, I would think we probably retest this trend line, probably higher though at 127.18 versus the lower end of the range the last couple of times, just because this is a rising trend line, and we'll have to wait to see if we get some sort of data that's strong enough to actually break the pound decisively lower. It was a very mixed day on equities as well. I will point out that tomorrow morning we will be getting earnings from UNH. United Health is the largest Dow component. So depending on what UNH does, it's going to have also a big impact on the Dow specifically, much more so than what it is going to do in the NASDAQ and in the S&P, just because the Dow is a price-weighted index and UNH is the largest value by price in the index, so it carries the most weight. And so if this company were to report good results and UNH were to go higher, that would obviously help to propel the Dow higher. Likewise, if UNH were to report weak results and UNH were to fall, that may outweigh any sort of news that you get on the macro landscape, especially if it really makes UNH move lower. We can see that UNH has had a very strong level of resistance at this 540, this 550 area, and so you would really need to get a report that propels it above 550, I would think, to have a really positive performance on the Dow. We also get the major banks like JP Morgan and Bank of America tomorrow. So you can see that tomorrow UNH has almost a 10% weighting in the Dow. We're also going to be getting results from JP Morgan, which has about a 3% weighting in the Dow. So these two stocks together could have an impact on the overall Dow. And so I think that's important to be aware of, because today basically the Dow got up to this old resistance level at 37,785 and was unable to get through it. The Dow, like many of the other instruments today, gapped higher and then immediately sold off after it tested this 37,785 region. There's a bunch of different ways you can really think about this. You could think about it as a rejection of the high, or of the index trying to make a new high, with this retracement potentially starting a new mode of wave down, with this being a retracement. Or we can think about it from the standpoint of, we're making a series of higher lows and higher highs, and ultimately we're trending towards taking out this 37,785 level. I think that given you have these earnings coming out pre-market, specifically in the Dow, along with these macro data points, it's really going to make a determination on whether or not this market, especially the Dow, is going to continue to move higher and break through this level. I would think that if we were to break through this level, we would potentially, if we just kind of extrapolate a potential move off of this, if assuming this is some sort of consolidation pattern, it would probably suggest maybe we move up to around 37,900 if we can break through this 37,790 level. Otherwise, it looks like there's a good chance that you can just revisit these lows at 37,435. And I think given that you have these macro outcomes and you have these two specific companies reporting results, which do make up a significant portion of the Dow overall, you're going to want to see what those results look like. When we look at the S&P 500, we also got up to this previous highs right here. We actually went right through it very briefly and again sold off very hard. We can call that again with the viewpoint of a rejection of the high. Again, we didn't we actually again closed lower. It's interesting here because when you look at the S&P, you can clearly see that there's one top, two tops, three tops. Is this some sort of topping formation, with 4,700 being the lower bound of it that needs to break for confirmation? As I've kind of drawn in here, I also drew in this little potential. Usually when I see patterns where we get these big moves up and then a straight line drop, it immediately makes me think about whether or not we have some sort of diamond reversal pattern forming. And it's possible that there is, but again, really for the S&P, for this to take place, you're going to want to see the index gap lower tomorrow, very quickly below 47.75 and then continue to drop. Otherwise, I think what's more likely to happen is that, being that it is a Friday and you're going into a long weekend, barring some sort of surprise announcement from the macro from the PPI report, there's a good chance that you just get this sort of grinding motion all day in the index between this 4750, which is the zero gamma level, and the 4800 level, which is the call wall. And knowing that on Fridays, systematic funds tend to like to short volatility, it could just create this sort of grinding trading range tomorrow. in the S&P 500, especially with, this longer 3-day weekend coming up here in the US. But obviously, I think, again, you need to see how the data comes out, and then I think you're going to want to see if there's a gap. I think if there's a gap lower, I think it's going to serve as confirmation that this is a diamond pattern and that we could potentially retrace back down to 47.50 or so, which would be the bottom of the diamond, and then watch to see whether or not that breaks. Otherwise, again, your resistance levels up here at 4,800 at the call wall. And then finally on the NASDAQ 100, again, it has a similar sort of look to it with that diamond-ish look. Interestingly, yesterday we got up to this level right here, which was a gap created on January 2nd after we came back from the new year. And if you notice that yesterday we got up to that level and we failed. Today we gapped above it and then we moved back below it, came back to it and retested it. Again, this pattern is similar looking to the S&P, so you're going to want to see if you get some sort of gap lower tomorrow. If we gap lower tomorrow, I think it's a similar sort of setup with a potential retracement back to the 16,630 level. While I think if there's upside, I think you're kind of limited between this 16,000, call it 800 region to 16,900 region in terms of a trading range. Keeping it in between this level here and the 17,000 region, just because, again, it is a 3-day weekend and we know that we have these higher gamma levels going into OPEX next week that could serve as resistance in the marketplace. Anyway, I hope you found this helpful. Good luck, and we'll talk to you again next week. Bye.